why the crypto market might bounce back, and the key events from Friday we'll be discussing shortly. First, I want to go over the trades I'm keeping an eye on throughout the day today, and after that, we'll also talk about investments. All right, first, we'll go through the Bitcoin chart to see what's going on here. First off, I'm paying close attention to the fact that as long as we're below this area, we consider ourselves in a bearish, a very aggressive impulse, and now we're on a potential corrective move. Okay, if we zoom in on a smaller time frame, we'll notice the following aspect. Following the news from Friday, which we'll discuss at the end, we had a move above this area and the breakout of this V-shaped path reversal. Yeah, because here we had a V reversal pattern that was broken through. Right now, according to certain setups, it's considered that we're in a bullish zone. But at the same time, if we look at a higher time frame, here we can consider that we're in a large bearish flag, or in a potential rising wedge. That's exactly why throughout the day today, I'm watching two very important aspects. First of all, the primary scenario should be this one, which is related to the previous impulse. Yeah, we're following this trend line. And if a breakout occurs, automatically. I see. I also have a consolidation stop loss above. Yeah, on the retest, stop loss above, take profit 1 to 2. This would be one of the main setups, and a secondary setup that would follow the idea that, okay, we're retesting this V reversal zone, and from here, a new upward move will begin. Similarly, we have here, I'm emphasizing this consolidation zone. And from the moment it's broken through, I can also look for buy trades. Ideally, I should be very careful at the first breakout. What does it mean to be very careful at the first breakout? Because the first breakout might be a fake out. Yeah, because the previous impulse is a downward one, consolidation. And there's a pretty good chance we'll have a fake out that leads to a valid breakout. That's exactly why, ideally, we'd want to see a second high above the previous one before considering any buy trades. We can do the same things on other pairs, but I'll explain how to execute on other pairs more in that free course. It costs you nothing. I'll tell you at the end how you can get your hands on it. The free trading course. All right. We're also looking at USDT dominance here. We see that we had an attempt to break below the support zone. Yeah, and seeing that Bitcoin failed to reach its previous high, and yet USDT dominance broke below this support, it means that during this period, altcoins actually performed a bit better. This means that if we have a buy setup, we might see a bit more volatility on altcoins, and it would be preferable to execute on altcoins. Let's also take a look at Bitcoin dominance. Yes, we see that here too. The chart tends to stay in a sideways movement, which is quite positive, especially considering that in the past, every time Bitcoin crashed, Bitcoin dominance tended to rise. This, as I told you, somewhat reinforces, at least for now, the fact that altcoins might be at a potential bottom. Good. Let's see what's happening in traditional markets as well to discuss investments. And after that, we'll also go through trading in the forex area. We see that with Friday's movement. Yes, we also had a slight increase on the S&P because the inflation figures came in that came in at 2.4%. What does this mean? It means that right now, the measures taken recently are correcting inflation, which was one of the biggest problems for the economy and a hurdle for rate cuts. Following that news, we see that from April, yes, for March, the chances of cuts are very small, at least in the current context. Anyway, we're interested in seeing the NFP at the beginning of next month, then the CPI, and only after that will the FOMC meeting follow. Although the upcoming FOMC meeting will still have two more rounds of important news that will define a potential move. But under such conditions, at least the ones we have right now, we see that in April, there would be slightly more chances, but cuts are truly expected somewhere in June. That's when the probability would be highest. That's exactly why the markets also reacted slightly positively. But on the other hand, I don't see a risk on sentiment. I don't see the idea of gold starting a downward movement that would reinforce the fact that, okay, we're approaching a moment that might be much more favorable for the investment area, such as stocks or the crypto space. So for now, we've broken through this bearish flag, but following last week's news, at least we don't see, as I told you, a downward movement on gold. We'll see if something like that happens in the near future. Overall, things look good for now. Now, for the investment side and the crypto side, what would need to happen for all this news we've seen to materialize? Well, first and foremost, I want to see that the price would return above this area, yes, which is a very critical and important area, returns and stays above this area at 74,000. And at that point, I'll start to believe that we've returned to a territory bearish, but for the simple fact that we have a low below the previous one, and now the behavior is a downward trend. Normally, as long as we're below the ATH, even if we have an upward movement, the price can always come and make a new low below the previous one. That's exactly why this is the first step, to see a move above this 72,000 zone. And to invalidate the idea of a bearish setup, we'll need to form a new all-time high on BTC, which will clearly be quite difficult and can't happen overnight. But if the news from the economic calendar continues to come in the way it has lately, things calm down and we don't see new threats from Trump or any other conflict. On the contrary, maybe some of the existing conflicts will die down. At that point, all the puzzle pieces would fall into place so that we have the context needed to see that kind of performance. Good. Let's see what we have on the euro side real quick and what trades we could look at. And of course, I'll explain how you can get the free trading course to understand these strategies that I use. First, we see that in Forex, especially the euro right now, since that's what I'm watching intraday, we had a move, a correction, a new impulse, right? We have a new impulse and then a new potentially corrective move. Okay, let's expand on a smaller time frame. And here we'll discover something very interesting. Yes, we have a triangle pattern. I really like going with the pattern idea because they give me a perspective on the direction the price might take. And of course, it can give me entry setups where I can place my stop loss and everything based on it. With a triangle, you need to know one very important thing. The triangle is a mixed pattern, meaning it can just as easily break out to the upside as it can to the downside. In such a case, if I'm looking to trade just the triangle, I'll identify the resistance zone and the moment it breaks, for example, to the upside, to find my entry point and where I want to place my stop loss. The same thing applies to a breakout to the downside. I want to identify a support zone to use in confluence with the potential breakout to place my entry, stop loss, and take profit. And that's pretty much what I do on the euro in these conditions. I don't know if it'll happen today. Let's see how things look intraday, though, because this might still stay in this zone today or tomorrow. I want to see where the open is. It was quite a volatile one. So here I see the opening candle. Whoa, very big, very big. So the whole opening candle is this size with a false breakout to the upside. Okay, so I think on the intraday side, seeing this false breakout at the open, it makes me think we might get a valid breakout to the upside. And this would align with the idea that, in fact, over a longer period of time, we had this area, we moved out, it came back, corrected, and now it's continuing the impulse from where we started in this zone. Something that also overlaps with what's happening from a fundamental perspective on the DXY, which makes me think it's on a potential downward move, right? It's in a situation where it's likely to depreciate and automatically gold will appreciate, the euro will appreciate. Good. Let me explain how you can get access to the course. You just need to use the BingX affiliate link in the description of this video. Create an account, trade a volume of $100. You'll get some bonuses for that volume anyway. And the steps you complete, and then email me your UID at the email address in the description. It would be preferable to use a Gmail address, and I'll give you access to all the course material to make it easier for you to understand my approach to the charts. Where I enter, how I enter, why I enter, how I make my trading plan, how I build my journal. You have absolutely all this information in that free course. So, all that's left is to wish you a wonderful day ahead, success in everything you've planned, and of course, last but not least, smile more often because it doesn't cost you anything.